So good afternoon. Thank you for joining this session. I hope that I can give you some tips, interesting advice on what is happening in the fast payment and the impact on the treasury side. Just 2 words on what instant payment is. I think that we are familiar. Status on the project in Europe, regulation, impact on the regulation. EBA clearing and the RT1 service that is going live at the end of this year in November. Some initiative on TIPS, European Central Bank, and the working group that is working on this. 24/7, 365. So it means that we are talking about a service that is running 24/7, so all day. Instant payments is based on the credit transfer between two accounts. All chains, all transactions settle in 1.5 to 15 seconds. It's based on the authorization, confirmation, and clearing, like normal credit transfer. Once payment reaches the beneficiary account, can't be recalled, and it's based on the ISO standard 20022, so what we already know from SEPA batch. And as I was saying before, it's a 27. It's important to understand 24/7 for the impact on the business day we will see later. 25 billion transactions are expected in the next 5 years, so per year, and more or less are 33 transactions per head in Europe. That is very important. So on the liquidity management side, this number is very important if we compare with the 10 billion transactions expected in the US in the next 5 years. Several associations in Europe are working on this. European Payment Council, and I think that you are familiar with this scheme. It's coming from a rule book, just to explain the technical requirement to settle instant payments, the pan-European scheme. EACA, the Association of Automatic Clearing House, is working on the interoperability because several schemes are going live, are developing in Europe. EBA clearing is the strongest automatic clearing house, but first of all because of the number of participants that joined the scheme. So, for example, SEPA that went live in 2009, and the RT1 service that is going live in November when the new regulation come into force. We have many domestic schemes are going live. We will see in details in the following slides. And then UK with a fast payment system, so instant payment system, that went live in 2008, is still live, but there is a plan to migrate to the pan-European scheme in 2019. Several countries, I was saying, are planning to acquire, go live with an instant payment scheme according to the pan-European. So 34 countries potentially can develop the scheme. It means that like Hungary, Romania, Slovenia, France, there are a lot of countries, Italy, that are developing the solution. The first one, EBA clearing, the service named RT1 is going live in November, and is based on the first window. 29 banks are going live, and then there are several windows planned in 2018, where several banks from the SEPA batch environment will migrate or will join the instant payment service. It's important to understand the impact of the PSD2. PSD2, I don't want to talk about the PSD2 now, but just a few information related to the impact of the requirements that impact instant payments. First of all, we should know that we are moving from a batch system to real-time system. The organization of the bank should change. So it's not only a new payment system, but it's the way we do bank. The way we banking should change. The organization model of bank change. It is because we are working now in 24/7, so there is no business day, there is no end of day. And we know from the Treasury point of view that the business day is important because the day close and something else happen on the RTGS system or other level. And of course, talking about the business day, the concept of business day, we know G20, Basel III, intraday liquidity management, So what the Treasury should do to keep under control the liquidity. I have listed for you some functionalities are coming from our solution, but are available in every Treasury control room. So especially when you work with the corporates, indirect participants, several settlement account, you need to monitor the liquidity in order to be sure, of course with the regulator, to keep under control the liquidity, to provide all report you need during the day according to the new regulation. And this is important to keep in mind is because we are talking about something that's happened in the business day, so 6 o'clock in the evening, everything is closing, compared to a 24/7 service that is running 24/7, nighttime, bank holiday, weekend, and so on. I want to show you here in details what will happen with RT1, so EBA clearing, in November 2017. Banks open a technical settlement account. Payment will be settled in this account one by one. So clearing a settlement coincide and happen here. It means that I'm a financial institution. If I don't have enough money to settle payment will be declined. That it means that according to the user experience is the failure of the project, of course. So we are comparing and the 24/7 service where the technical settlement account will happen in our PM account in Target 2. It's a pan-European system, so it's working with the Target 2, the European RTGS system. That is working with the model IC6, the one we know today for the service step 2. But this service is working from 7 o'clock in the morning to 6 o'clock in the evening. It means that I can't found the technical settlement account when Target 2 is closed. That it means that from the Treasury point of view, I need to found liquidity in this account, especially during nighttime, during the bank holiday, during the weekend, in order to be sure I'm going to settle payments, finger crossed, because if I provide the wrong liquidity, payments will be declined. There is another point. I can't overfund this technical settlement account because we know, and you know better than me, that you can leave liquidity outside Target 2 because it's not under the jurisdiction of the Target 2, so reserve, minimum reserve, and all requirements coming from the RTGS system. One step back. So we have a liquidity risk. September 2016, the European Central Bank launched a consultation. This consultation was in order to realize the target instant payment service, and then we will see a service or a system, in order to mitigate the liquidity risk. It means have in Target 2 a sub-account, the name is TIPS, to settle payment coming from all pan-European system. The feedback received was positive. The European Central Bank decided to develop the service that is going live in November 2018, so in 1 year, more or less 1 year. Moving to the slide we have seen before, the difference we will see with TIPS is this. Technical settlement account we don't need, but settlement will happen in TIPS. What is the benefit? So everything is running 24/7. We still have the fund with the RTGS system that is not working 24/7, but only according to the time of the Target 2, so the business day, from 7 o'clock to 6 o'clock in the evening. But there is a big difference, because if we know that TIPS is still part of Target 2, so the same jurisdiction, we know that it's not a problem if we overfound the technical settlement account in TIPS. It means that at 6 o'clock in the evening, I can overfound the TIPS account. On the Treasury point of view, I have no problem because it's still Target 2, so it's still subject to the minimum reserve requirements. And so from my opinion, so point of view, Treasury point of view is fine because I still Target 2. And of course, also because apart from Target 2 security, during night time, there is no other use of Target 2 money. So this is the reason why the European Central Bank decided to develop Target TIPS. That is the main reason is to mitigate the liquidity risk. And also there is another reason. According to what I said before, so 24 countries potentially can develop the scheme, there is no interoperability. It means that we are going to see a similar situation we have today with SEPA. SEPA, where different schemes coming from the several European automatic clearing houses are not talking to each other, so there is lack of interoperability. With TIPS, we can overlap the lack of interoperability because all payments could be sent here in Target 2. There is also published the pricing. I invite you to go to the European Central Bank website, and I think the transaction is around 0.20 cents, but it's something that you can find out alone. I show you a use case. It's very interesting, that is coming from AmiPay. AmiPay is the working technical group that is working for Target 2, for TIPS, trying to find out, to discover, and to solve all problems related to the value date. I show you a use case. So first of all, what they are discussing, I'm talking about a meeting that it's happened last Friday. Heritage system, as I was saying before, is working just during the business day, compared to a system that is running 24/7. What's happened? We have a payer, so I submit a payment to the pay. The transaction, I'm going to submit at 7 o'clock, 10 seconds, according to the requirement of Target to secure the target instant payments. Payment should settle in at least 5 seconds. It means that in 5 seconds, in the payer bank account, I will see a debit in day D, because 7 o'clock is still ordinary day, while in the pay bank account, I will find a credit in day D, because it's still ordinary day. But if we see this movement, this transaction, from the business day point of view, so we are talking about Target 2, we will see that 7 o'clock in the evening is already this +1, because Target 2 closed at 6. So there is, I think, 30 minutes window maintenance, but they open again. So after, let's say, 6 o'clock, is already D+1. It means that when Target 2 open, in the respectively account of the payer and the payee, we will see a debit, a credit in D+1. And this is what the AmiPay is discussing. So I'm going to introduce the concept of interest rate risk. It is what they are discussing. It's a decision that should be taken before TIPS go live in November 2018. And with this scheme, I'm going to recap what I said before. So we have two different value date for the same transaction. In the payer bank, so the payer account, we have the debit in day D. Pay bank account for the pay, we have the credit in day D, while in the respectively TIPS banking account, we have D+1 for debit and credit. What is the problem here? If a bank decided to apply different rule, different interpretation, we can create confusion for the clients, because instant payments for me is something that I'm sending now, and I won't see my account on the beneficiary account now, today, and not in this +1. So it's important, also because for a financial institution point of view, it could be difficult to explain to the client what is going on, plus an arbitrage possible on payment flow. One of the possible solutions they are discussing at the Target 2 is the UK experience. The UK experience is based on the concept on the single amount. I'm not saying that it's the final decision that will be taken, but it's what they are discussing. The concept of the single amount is based on the system operator. In the UK is a BACS, decide for a compensation, so it's a netting amount that will be settled the day after at 3 o'clock in the afternoon, with all debit and credit transaction in a single amount, and of course with single date. It means that everything happened today in the 24 hours will be settled tomorrow at I think that around 2 p.m., 3 p.m. in the netting single amount. It is the same for all systems, for all participants. In this case, could be TIPS. We have two benefits. First of all, the system operator, I was saying the UK is BACS, but in Target 2 will be TIPS. There is no arbitrage because we have a single value, a single amount. This concept is coming from the experience in the UK, where they discovered that all debit, so all payment that I send and all payment I receive, more or less they compensate between each other. So there is a not relevant interest risk. Plus there is another benefit. When I'm going to settle payment one by one without any forecast, if I'm a treasury, I become crazy because I don't know what I'm going to settle. What TIPS is thinking is, at 7 o'clock or every day, so today, I will receive the forecast, so the provisional message saying at 2 o'clock I'm going to pay or to receive that single netting amount from the operator. It means that I'm going to mitigate the liquidity risk. I can set up the right liquidity. I don't need to provide the liquidity at the last minute in the market. Plus, I can relax during the night time, weekend, bank holiday, because I know that my transaction will be settled the following business day. It is, I'm saying, is not the final decision, but is what the AmiPay group, so the strategic group on TIPS, is going to acquire, to adopt like a rule. I finished. I don't know if what I told you was interesting, but it is my email, LinkedIn, or a coffee area. I'm happy to speak more with you. Thank you.